morning, everybody. We're live, not really, but we're virtual from IQ Investor Quarters and wherever else you're watching from across the world. And this is kind of a little bit fun. I guess we might as well make it fun. And I'm excited to have Edwin Kelly here, who I happened to talk to yesterday, and we talked about doing something like this week. I didn't know we already had it planned, but we may do something else. And Jeff, nice to meet you over there, part of Specialized Trust. And I know they are going to bring you some information that is going to excite you and teach you how to put some money in your pockets, teach you how to create some wealth, and teach you how to access some of those funds that have been sitting there and make it work for you. And without any further ado, I'm going to leave it up to these guys to take this time that you guys have graciously given us to come out and hear what we're doing. Make sure you tell your friends that this is going on Tuesdays and Wednesdays, and we have regular classes to bring you information that's pertinent and available to you right from your home these days. So thank you guys for joining us, and the show is now yours. Thank you.
Excellent. So Catherine, do you want me to just kind of share some information? Do you guys have questions? How did you want to kind of handle this format?
I am open to, I know that you had some information that we talked about this morning that I'm really excited in about the stimulus package and how you can use that, but also basic about your company and your background for people that are completely new for what's going on. And then we have a little bit more to share, surprises for everyone also at the end.
Perfect. Yeah, I might say one thing, interjecting here. Let's use this as a time to like preempt what's going to happen on Thursday night, so everybody who's on this call can get ready for Thursday night and invite some other people in. So Thursday night we can get some more exposure from you joining us again.
Okay, great. And how long are we going today? How long do you want me to go? How long do I have?
30 to 45 minutes.
Okay. Perfect. So yeah, so let's talk about. There's been a lot of changes, right? I think we're at the new normal now. I think is how everybody's probably feeling, right? We're kind of used to the quarantine and restaurants being closed and all those kinds of things. The stimulus plan was revealed. It's been a couple of weeks now, I think, at this stage of the game, and so there's been lots of changes. So I'll start with some background and kind of where we're at today as an organization and how we help everybody listening right now and what we're going to talk more about on Thursday night. So by way of background, my name is Edwin Kelly. I'm CEO and one of the two founders of Specialized Trust Company. Keith Marsh is my other partner in the company. We founded this company, and that's 5 going on 6 years ago now. And we've been in the business, I say 23 plus years. And I say 23 plus years because I don't like to age or date myself, particularly being single and all, right? So I don't do that. So I put a plus line after the 23, and that number's never changing. So 23 years from now, I will still have 23 plus years experience. That's about as accurate as I can get. And so we've been doing this for a long time and in the self-directed space. I mean, this is pretty much all we do. And so what is special? By the way, I've written some books on this. I've been interviewed all over the place, quoted in a lot of magazines and newspapers and all that fun stuff when it comes to self-directing and self-directing strategies. So what is Specialized Trust Company, first of all? So we're going to talk about self-directing your retirement accounts and benefits of that and some recent changes, because there's been a lot of changes. And so Specialized Trust Company is a licensed financial institution. We are a heavily regulated financial institution. We're a trust company. And what we specialize in, hence the name, right? Real clever. What we specialize in is allowing clients to gain access to their retirement money and having complete control over their account to invest in anything that the government allows. And that first part is critically important, okay? And here's why that's important. A lot of people are under the misconception that the only thing you can invest in a retirement account is stocks, bonds, mutual funds, and CDs. And most people hold mutual funds. And although those are very common investments, those are not the only investments allowed. In fact, what I tell folks is that you can invest in virtually anything. If you can do it outside your retirement account, you can invest in it inside your retirement account. And subject to the rules and regulations that the government has in place for us, right, for retirement accounts. But let me give you an example. If you can buy a property, rent it out to a tenant, and collect cash flow outside of a retirement account, you can do that inside of a retirement account. If you can get a property under contract and assign that contract for a fee or a profit to another investor, and you can do that outside the retirement account, you can do that same thing inside a retirement account. If you want to buy a property, hire contractors to fix it up and sell it at a profit, you can do that outside your retirement account. You can also do that very same thing inside a retirement account. Here's one last example. If you're say a passive investor, or you want to be a passive investor because maybe you don't have the time to go out and find a property and fix it up yourself, but you understand that process, and you know, and you're networked with other investors in your community, and you want to be able to make money beside them without having to put in all the time and effort, that's where private lending comes in. So if you can lend or joint venture or partner on a deal outside of your retirement account, guess what? You can do the same thing inside of your retirement account. So to do all that though, what is it that is required to do that? Well, you have to have access to your retirement money. You have to have control over the money in your retirement account so that you can direct it into what you want to invest in, hence a self-directed retirement account. So that's the role that Specialized Trust Company plays, is that we allow our clients to invest in anything allowed by the government. And so if you have your retirement account right now, say in a company sponsored plan and it's somebody else's company, not your own, right? So you work for Ford Motor Company as an example. Well, they're going to limit you to the 5 or 10 mutual fund options in that 401k plan. If you have your IRA at a bank or a brokerage, you know, like an Eddie Jones or Chase Bank, then they're going to restrict you or limit you to stocks, bonds, mutual funds, and CDs. So to gain access and get control over the money in your account, the team member you have to add to your team is a self-directed custodian or a self-directed trust company, as we're called. And so that's the role that Specialized plays. That's what we do. Well, let me expand on that a little bit. So what do we do for you and what do we not do? Well, what we do is we allow you to set up new accounts and contribute to them. Or if you have money in existing 401ks or IRAs that you can move over, you can transfer that money over into a self-directed account with us and now self-direct it into anything that we've been talking about. So that's the role we play. We execute your directions. We work for you, right? You tell us what to do with your money. We do the processing of that. We do the safeguarding and custody of the assets. We do the administrative compliance from a tax standpoint, right, to maintain the tax protections and the asset protections that these accounts give you. So those are the roles we play. What don't we do? We don't call you with the hot tip of the day, right? We don't try to sell you investments. We don't take any money from your investments. We charge a very competitive low fee for the service of providing the retirement account and allowing you to direct it. But you never have to worry about waking up one day and seeing your account value go down because your money was, we invested your money in something that you know, is volatile like the stock market. So that's what we don't do, right? We're not going to solicit you for investments. We're going to give you the freedom and the control to make your own decisions. And so that's really the role of Specialized Trust Company. And that's the role that we play for you. Catherine, did you have other questions? You want me to just kind of keep rolling with this?
I love everything you're saying so far, but I think if you want to keep rolling with it, I would like you to hit, because I want to learn more about the stimulus package. But if you want to save that till the end, I'm cool with that also.
No, we can jump into that. So let me transition because here's something that I've also come across here recently. And so let me share this with you guys because you may have experienced this. And this is really important. But if you've tried to go to the bank lately, you have very limited services. Has anybody experienced that? Yeah, I see some nods. So boy, is that frustrating. right? The only people that I could talk to at the bank are the people that if I want to pay my mortgage payment. Like outside of paying a mortgage payment, it doesn't seem like anybody wants to talk to me about anything. So I'm really limited on the services I can get, which is a really kind of a bad time for that to happen because like I wanted to set up some new accounts, I need to transition some money around. There's nobody to help me do that. So if I can't do something online, which there's been a few things that I need to do that I can't get done online, I can't talk to a person. So unless it's basically doing an ATM transaction, we're extremely limited with many financial institutions on what we can do. And that's problematic because now, right, and I'm not saying it's by any fault of theirs, but what I am saying is that I'm limited with what I can do with my money and some of those types of things. And I don't know about how you feel about that. If you try to deal with the banks on certain things that you can't get it done, I really don't like that. So how does that apply to the stimulus and all these things? It has direct impact. So what I want to let you know is that Specialized Trust Company is 100% open. We are 100% functioning, and we are currently meeting 100% of all our service levels. Our clients have not been negatively impacted, have had any limited access to their accounts with us in any way, shape, or form. Why is that? Part of that is the way that we are able to respond to the market and function. And I actually knew that this was going to happen. Well, let me say this. I believed it was going to happen. Everything we're experiencing now, I believed it was going to happen. And I came to that conclusion the second Saturday in February. So way before the president got on TV and said, hey, we're going to have this quarantine, right? And the governor started shutting down the states and restaurants and all these types of things. What happened back in February was, so one of the things that I enjoy really just as a personal interest, you could call it an interest, a passion, whatever you want to call it, is I'm into style and fashion, right? And so that's like one of my things. And so I was looking at adding a new watch to my collection this year. So I follow the watch collection or the watch industry, I should say, pretty closely. And not only for that reason, but I like studying other industries and applying lessons and things that work in other industries to our industry, right? And that's one way that we've innovated over the years, is that I have the ability to go look at other things and other industries and pull many of those things that are beneficial to us doing these things into our business. So at any rate, what happened on the second Saturday in February is that a conference in Switzerland was canceled. Now, I'll give you the quick backstory on this. So the way the Swiss watch industry works is that there's a conference called Basel World. It's held every March in Switzerland. And what happens is Rolex and all the other big manufacturers of watches show up with all their models for the year. And they do this conference, this huge event. And all the buyers globally from around the world descend on Switzerland, and they look at the new models and they place their orders, right? And they say, hey, I want 10,000 of this model and I want 20,000 of that model. And then Rolex and the other manufacturers know what to manufacture for the year. And that's how that whole industry operates. That second Saturday in February, what happened was Basel World was canceled by order of the Swiss government. And it happened on a Saturday that it was announced. When that happened, I said, this is going to hit the US. And so we have to prepare for all events and everything going away. And so that Monday in February, we started going into action. So fast forward to March, by the time the president announced the quarantine, governor started shutting down schools and restaurants and the economy and basically non-essential businesses, we already had a plan in place. We were already executing. We were ahead of that as much as we could be, okay, at that point in time. So as an example, what were some of the things that we did? Once they announced the quarantine, one of the things that we did was we practiced social distancing in the office. The way we did that was anybody who could work from home, we sent and set up in a home office. So we have several staff members. Jeff dialed in, he's working from his home office. You can't tell, I'm in my home office. Danielle's in her home office. So we're working from home offices. For the employees, the essential employees, it turns out I'm not an essential employee, by the way, but for the essential employees, right, in our office, we spread them out. So I gave up my office and gave it to someone else. Keith gave up his office, we gave it to someone else. And so we segregated employees, and we have, instead of 6 feet of separation, we have more like 100 to 200 feet of separation between employees. We have a nurse assistant that shows up every morning from 7:30 to 8:30 a.m. Every employee has to answer a questionnaire and have their temperature taken. When that happens, if they answer yes to any of the questions like, hey, have you coughed up a lung in the last week? Then you can't come in the office. If you have a fever, and I can't remember what the exact temperature is, it's like 100 or maybe it's 101, but whatever the temperature is that signals a potential issue, we send that associate, that employee, that team member to the doctor to get tested. And so we've sent 2 people to the doctor so far. The test came back negative, right? So negative is a positive when it comes to coronavirus. And so we've been able to fully function. We've been able to service our clients. And I just want you to know that, because if you're a client already, and you're able to manage and direct your account as normal. If you're not a client yet and you've experienced hiccups at other financial institutions and banks, you're not going to have that at Specialized. Okay, we've taken every precaution we can. By the way, that even though we're doing this in a coronavirus time, I can tell you this is how we operate the business, and this is valuable to you if you're self-directing your account and you're thinking about what self-director provider to use. There's not a lot of us out there, but there are obviously others other than Specialized. And this is the way we operate things. We're always saying, how do we serve the client? How do we protect the client? How do we make sure that they're able to do the things that you want to get done? Because this is your financial health, okay? And that goes to a second point that I want to talk about, because as we talk about stimulus and the things we do as an organization, if you think about all the measures we took to keep operating, we did that for 2 reasons. One is because we are concerned about people's physical health. So we want to protect our employees to the best of our abilities and keep everybody healthy and safe during a time like this. But the second thing is we're also equally concerned about their financial health. And so we know that people need paychecks. We know that they need the income. We know that they need to stay on benefits. And so we have taken, I won't say extreme measures. I mean, these are common sense things, but I can tell you that in talking to some of our competitors and how they're operating, like, they're not doing any of these things. This is just the attention of detail that we bring to the business and to our clients in supporting you guys. So just so you know, it's business as usual as we can be in a time like this at Specialized. So that's important to clients. Let's talk about the stimulus. There are a lot of advantages for you guys right now in the current environment. There are some things that came out in the stimulus plan as it pertains to retirement accounts, some of which I like, some of which I don't like. And so I want to share those with you guys. So let's talk about what were some of the changes for 2020 in the stimulus/relief bill that was passed as it pertains to what we're talking about right now. Well, so one of the things that they did is that they said there's no RMD on retirement accounts this year. If you don't know what an RMD is, and I try to stay away from jargon because it doesn't make me any smarter, but this is a somewhat technical subject, so sometimes we kind of have to get into some of that technical jargon, but I'll explain what that means because a lot of people aren't familiar with it. If you are familiar with it, you're way ahead of the game. If you're not familiar with it, that's okay, I'm gonna explain it. So an RMD is a required minimum distribution. And where people normally see this is on tax deferred accounts when they hit a certain age. So what the government says is, hey, you've got this money in a retirement account, it's tax deferred, meaning you got a tax deduction when you made the contribution. Your money grew faster and larger because we didn't charge you taxes while you were investing and growing your account, generating income inside the account. And now it's time that you start taking some money out of that account, right? It happens in the 70s. So it was traditionally 70 and a half, and now they're increasing that age. But the idea is that they want you to take out a minimum distribution, right? So you're taking some money out, and again, in a tax deferred scenario, that triggers some taxes on those distributions. So the first change that they made was they said no RMDs. Okay, no RMDs this year. You don't have to take one. Now, why did they do that? This is an acknowledgement of the investment problem that most people have. The reason why they said that is because the stock market has taken a hit, right? It's been extremely volatile. Now, here's what I will tell you. The stock market is always volatile. What we've seen in March and April is a condensed version of that, right? So it's always been volatile. It's always going to be volatile. It's just sped up, if you will. It's been condensed, or that time frame has been collapsed into a shorter period of time, so people are seeing it more. When your account goes down in value, if you're forced to take money out, and the way it works with mutual funds and those types of investments is that you're forced to now, so your nest egg went down in value, now you're taking out a distribution, you're drawing it down even further. So this is extremely harmful to someone who is in a distribution phase, or has money that they don't necessarily need to distribute, because you're forced to sell low. You're forced to sell or liquidate at a loss. So the government has acknowledged the investment problem by saying no RMDs in 2020. Okay, that's a good thing. I like that. That's a good thing. But like I said, don't miss the lesson here. The lesson is, if your money is 100% in those types of assets, this is an ongoing problem for you, whether coronavirus or no coronavirus. This is an ongoing challenge. So one of the things you want to think about is, how do I shift into investments that are more predictable, certain, and secure? We're going to talk about that. Okay, so that was one thing. Second thing, now here's something I don't like. And I'll say it depends on the scenario, but this is something I don't like. The government said, okay, we're going to do something else on distributions from IRAs. We're going to allow you to take a distribution up to $100,000 in 2020, right? So you liquidate assets in your retirement account, is the theory, and you pull that money out. Now, when you take a what's called a premature distribution, premature means before 59 and a half. Typically, there's a 10% penalty, and if it's a tax deferred account, right, you pay taxes on that. So what they're saying is, we're going to waive the 10% penalty on premature distributions up to $100,000 in 2020 if it's due to the coronavirus. But basically, you just say, hey, I took this distribution due to the coronavirus because either I had it or I've been financially impacted, and they're allowing you to self-certify and say, okay, we'll waive the 10% penalty in your scenario. So that sounds like a good thing. I'm going to come back to why I don't think it's a good thing. The second thing that they did is that normally when you take a distribution, you get basically effectively a 1099, and because everyone knows what 1099 is, and you add that into your taxable income the next year. That's when you pay the taxes on that distribution. What the second change that they made when it comes to distributions is that they said, we'll allow you to spread that tax bill over 3 years instead of having it all come due next year. Okay, so we're going to give you 3 years to pay the taxes if you choose to, instead of 1 year. Again, looks like a benefit on the surface. The third thing that they said about distributions is that if you choose, we'll give you up to 3 years to put the money back in the account, because we recognize, this is the acknowledgement, they're acknowledging that we recognize you're taking this out because of a financial hardship. We also recognize that this is my interpretation of what they're saying, okay, just to be clear, but they're acknowledging that we know that that's harmful. If you're going to deplete your nest egg, that's harmful to you. So we're going to give you the opportunity to put the $100,000 or however much you draw out back in the account in the next 3 years. Normally, that's not allowed. Once you take a distribution, you can't put it back in. There is this thing called a 60-day rollover rule where you can have possession of the funds for 60 days and then put it back in. But if you go beyond 60 days, it doesn't go back in the account, right? And it's considered a distribution. So they've given flexibility on that 3 years to put it back in. Okay, so now let me tell you why I don't like that. it's an incentive, in my opinion, that people have been given to now do something in the short term that's going to harm them in the long term. Does that make sense? If we draw down our nest egg that took us years to accumulate and we draw it out in a matter of months, that is very punitive to most people. It would be to me. Okay, I don't want to liquidate things. And so that is a problem. That's why I say I don't like it so much. By the way, we all know that the government is spending trillions of dollars, and now they're asking for more billions, right, to keep going with this whole stimulus plan. And so oftentimes when they do things like this, it might seem like a benefit to us, but oftentimes it's really a benefit to the government. So they keep in mind, they have to figure out how to pay for this whole stimulus plan that they just passed. And I'm not saying it's bad or good. I'm just saying that it's dollars and they have to pay for it. So by now saying, hey, we're going to give you 3 years, we're going to make this super simple. In a sense, what they did was they just created a new stream of income to the federal government, right? If everybody starts taking distributions from their account, depleting them, because now they're getting this tax revenue, that they weren't going to get before, right? This is something that people weren't thinking about doing necessarily. So that's why I don't like it. Now, if you're one of those people that you say, I have no options, and I'm going to give you some other options, so you do have options. But if you're one of those people who think, or you're not like on a call like this and you're not getting this information, where I have no option and I have to take a distribution to make ends meet, then is the waiving of the penalty and the spreading of the taxes beneficial to you? Yes, hugely beneficial in your situation. Having said that, if that's not something you have to do, if there's alternatives, then this is a really bad incentive, right? Because it really does cost you in the long run, right? So what is an alternative to doing that? Well, here's an alternative that I like way better. And again, this came directly from the stimulus plan or the package, okay? So there were some changes made to 401k loans. Now, what is the difference between a self-directed 401k and a self-directed IRA? We can go in more detail on this Thursday night, but what I want to do is kind of give you a couple of differences as it pertains to the stimulus bill and how this can help you right now. Okay, so you don't have to wait for Thursday. The first thing that happened is on 401k loans. Well, let me tell you what the difference is between a 401k and an IRA. So an IRA offers a ton of benefits, When your goal is to create wealth, financial security, and financial independence, one of the best ways to do that is with retirement accounts. That's why I got into the business. There's a lot of different avenues I could have gone in financial services. I went into this specifically. I chose this. This was the path, because this was the path that I saw people creating vast amounts of wealth with when they understand how it works. That's why I chose this industry. So basically, you take a 401k, and I say a 401k is like a self-directed IRA on steroids. It amplifies all the benefits. It makes everything bigger and better. So as an example, with IRAs, we can do a lot of things with IRAs. Like I said, you can invest in virtually anything you can imagine. But one of the things you're not allowed to do with an IRA is to take a personal loan. You can't take a personal loan from an IRA. However, you can take a personal loan from a 401k. Now, because most people participating right now are real estate investors or getting started in real estate, what does that mean? That means you're basically effectively a business, right? Or you have a business, which means you now qualify for a 401k. You may never thought of it that way before, but you qualify for a 401k. So this is an option that's available to you. Now, one of the other misconceptions, just so you know, is that a lot of people say, well, if my money's in an IRA, I can't move it into a 401k. That's not true. That's not a government rule. There are a lot of financial institutions that say if it's in an IRA, we won't allow you to put that money in a 401k. But that's not a government rule. So that's, again, one of the benefits of self-directing is that if the government allows it, we allow it. So the government says you can take money from your traditional IRA and transfer it into a 401k. So we do that all the time for clients. They'll set up, they might have an IRA at Eddie Jones as an example, or Chase Bank. We set up a 401k and they transfer their IRA money into that 401k. Now, why would clients elect to do that in some cases? Well, here's one of them. You have the ability to take a personal loan from your 401k plan where you don't have that ability from an IRA. So effectively, you can create a line of credit for yourself or your business with your retirement account. It's a way to use your retirement money that you've been accumulating both today and for the future. So with a 401k loan, here's how the 401k loans traditionally work if you're not familiar with this. If you are familiar with this, then here's a quick review for you. The way 401k loans traditionally work is that you can borrow up to $50,000 or 50% of your account value, which is whichever is less. That's how it works, whichever is less. So let me give you 2 examples. If you have a $50,000 account value, how much can you borrow? $25,000, right? 50%, because that 50% rule kicks in. If you have a $100,000 account, how much can you borrow? $50,000, right? Because $50,000 is the max loan in dollars. 50% is the other part of that rule we have to meet. So that's how the 401k loan typically works. In the stimulus plan, they've amended those rules. So now they've amended a couple of things, 3 things specifically. The first one, they've increased the borrowing limit up to $100,000. So instead of having to take a $100,000 distribution, you could take a $100,000 loan instead. What's the difference between a loan and a distribution? There's several differences, but let me just give you one. The one big difference is that loan proceeds are not subject to taxes. So if you were to pay, say, 30% in taxes, right? So call it 25 to 30% in taxes, because that's probably what the tax bracket that most people right now are in. You're somewhere in that range. Instead of giving 25 to 30% of your money to the government, whether it's this year or over 3 years, right? You're still giving it to the government. You can get away from paying those taxes by simply structuring a loan, and now you don't have to give the government a dime. Okay, big benefit to you. So that was the first thing. They amended the loan provisions, and so we can borrow up to $100,000. The second thing they did, they eliminated temporarily for 2020 on these loans the 50% rule. 50% rule does not apply. So you don't have to have 200,000 in your account to borrow 100. If you had 105,000 in your 401k plan, you could borrow $100,000. Okay, so that's another big, because that was the second thing that they did that I like. Third thing that the government did with 401k loans that I like is that they are giving us what they call a 1-year deferment. So let's go back to how you pay back a 401k loan. A 401k loan, the way they're typically structured is that as a fully amortized loan over 5 years. So fully amortized over 5 years. The advantage to you is that, and we've helped clients do 401k loans for all kinds of things, create lines of credit for their businesses when they need money in their business because they're doing investments outside their their retirement account. But oftentimes people will restructure debt. So there's a lot of benefits to using a 401k loan to restructure your debt. And so the way that works is, so like as an example for people, and it's not an uncommon scenario, when we have clients who have, say, a high amount of credit card debt, they might want to restructure that. And if people are making the minimum payments on credit cards, it can take forever to pay that off. You restructure that as a 401k loan, oftentimes the payments are lower on a monthly basis, so you free up existing cash flow. And the second thing that happens is that it's paid off in 5 years, right? So it's a great thing. So there can be lots of reasons why somebody wants to take a loan from their 401k plan. The government said, we're going to allow you to defer payments for 1 year. So normally if you did a 401k loan, right, starting next month or the month after, you're going to start making a payment every single month to pay off that loan. Right now what the government's saying is, if you want, you cannot make any payments for 1 year, so 12 months, and you still have 5 years to pay it back. So a year from now, assuming they don't amend the rules again, you would start paying that loan back, but you still have 5 years to pay it. It's not condensed to 4. So again, we're getting an extra year. Now, one thing that you want to be aware of if you're thinking about employing a strategy like this is that if you defer the payments for 12 months, then it does accrue interest. I don't view that as significant, and here's why. When you do a 401k loan, who do you pay the interest to? You pay it to the person who lent you the money, which was basically yourself, right? You lent yourself money from your retirement account, so you're paying the interest back to your retirement account. So in that sense, it actually doesn't cost you anything. You're moving money from one pocket to another pocket. That's all you're doing. You're moving money from one pocket to another pocket. Super beneficial to you. You're keeping all your money. Nothing's going to the IRS. It's all staying in your pocket. Okay, I don't know how you get any better deal than that. So that's a huge plus. One other benefit, right, is you've probably seen the Fed cut the rates. So not only that, we're paying a lower interest rate on our 401k loans right now if you're initiating a new loan. So that's wildly beneficial. So everything works really well with the 401k loans. It doesn't require us to deplete our retirement account, right, by taking a distribution. By the way, the other challenge with distributions is that even though they're giving us 3 years to pay it back, it's been my personal experience, and this is what I'll call just life lessons, practical knowledge here, is that if somebody's taking money as a distribution from their retirement account because out of necessity, they typically don't have the money to put back in. Okay, so that doesn't really happen. So it's kind of like saying, well, you're allowed to do it. That's one thing. One thing is, are we allowed to do it? The second question is, how likely is that to happen? And in my experience, most people who take distributions from their retirement account don't have the ability to put the money back in. They do have an ability to pay back a loan in most cases because a payment schedule is set up that they know what it is, and those payments are made every single month like clockwork, right? So we pay our mortgages, we pay our car payments, we pay the 401k loan payment. But having the self-discipline to say, you know what, I gotta calculate what I need to put back every month and contribute, if you will, or put back in the account to cover the distribution, that never really happens. Okay, so that's why I prefer the 401k loan over the distributions. Catherine, I've got more to go, but I want to check in with you because I want to stop there. If you have any questions or thoughts or comments or anything, I want to let you chime in here.
No, I love everything you're saying, and it's really exciting for me to hear because it's not necessarily something that the media dives into regularly the way that they dive into some other portions of the stimulus package. We do have a chat box if there are any specific questions. I am posting in it now. Here, give me 1 second. Questions here. If anyone has any specific questions about what's covered.
Yeah, on my speakers.
Whoops. Oh.
Mark, did you have a question about what we just covered? I muted you really quick, but now I've unmuted you.
No, I think it was great what you did. I think we should just make sure everybody comes on Thursday night. There's going to be some more great information. This is just the tip of the iceberg on the information that he knows. And one thing I know about learning is when you hear things over and over again, repetition is the key to learning. This guy's got some information to deliver to you. So make sure you all come back on Thursday night to REI virtually live, coming to you in your homes. Edwin Kelly will be there with a bunch more golden nuggets. And we hope you'll show up and bring your friends because this is the way to learn, and it's ongoing right now. So stay tuned in to REI and IQ, and we bring you up-to-date information on what's happening today in the marketplace. And we sure appreciate you coming on this morning.
Yeah, so by the way, Mark, you just taught me a very valuable lesson right there. You just did the best thing ever. So when I normally do calls, I forget to insert a commercial every once in a while. Every call I do from now on, I'm gonna start inserting commercials. It's time for a commercial break, right? I mean, that's awesome.
These people have trained me. Don't forget to say this. Don't forget that it's SRQ REI Live. Go to our webpage. Go now. Down below. REI Live. SRQ Investor Quarters webpage. We'll see you there.
And when you laugh, it's literally a text I send probably 7 times a day to Mark. Don't forget to say.
I'm gonna have to have you start texting me too, Catherine. Hey, are you talking? Give him a commercial right now. You know.
The problem is when you're in the middle of it, you can't see the text. It just distracts your thinking, and then you get off track. She thinks
Yeah.
she's helping me, but she's making me go a whole nother direction in the middle of statements. But it's all good. We love you, Catherine. Thank you, Edwin. Nice to meet you, Rob. I think we've taken enough time for everybody. We should keep our classes on track just like we were live.
Perfect. So, all right. So then there's a lot more to share, which I guess we're going to share Thursday night. And I'm super excited because I haven't got to the best stuff yet. If you found the value in this, let me just tell you, Thursday night, we're gonna take it up a degree. So I'll turn it back to you guys.
I'm so excited. Thank you so much, Edwin. Some big things that I want to emphasize one more time is there is still money out there. There are still people and there are still ways to be buying. I will send everybody an email that has bought a ticket for this class, but if you guys are interested and want to share it out, please do so. We have almost an unlimited seat, so I look forward to seeing everybody again in a few days and learning more about what Edwin has taken away and what all we can do to continue to make money no matter the market. Thank you, guys.
Thank you.